Well, it's time now for our daily question and answer feature. Moneyline has gathered a team of experts to answer all your questions on money, finance and the economy. No question too big or too small. Our question this evening came via email from Tembi. She wanted to know what is the most important information that one must remember before filing their tax return. Mark Servitz, who's Director and CFO of TaxTim, answered this question for us.
The best thing that a taxpayer can do is just relax when they're doing their return, but keep all the records. Taxpayers keep every single record that they can have possible, and just make sure that when you are submitting your returns to SARS that you put in every bit of information possible. Don't leave anything out, because if you leave something out on the income side, you're going to be taxed more, or if you leave something out on your deductions, you're actually going to lose out, and it's beneficial to the taxpayer to put in all the deductions that they're allowed to do. So just keep all the records and file your return correctly.
Let's have a look at the markets now, starting in the United States, where stocks were in the red after the biggest drop in the S&P 500 since October. Traders watching oil extend its declines, and data also showed slower growth in the U.S. services industry. The market there was quite volatile today. In Europe, markets also fell after failing to shrug off Monday's global sell-off. Sentiment remains fragile ahead of Greek elections, which some fear could lead to a possible exit by Greece from the Eurozone. It's still unclear when, though. Here at home, the JSE bucked the global trend and staged a recovery today as positive sentiment towards gold shares boosted the market. Buyers were also there for banks and industrial stocks. Let's take a look at commodities. Gold continued to shine as investors flee oil prices and near 9-year highs in the dollar. Physical demand for gold from China is also seen as supportive. Meanwhile, Brent crude fell to a new 5.5-year low today, adding on to yesterday's losses before recovering somewhat. The fall appears to have been prompted by Saudi Arabia cutting prices to Europe. On the currency market, the rand softer as risk aversion dominates international markets, and traders are saying the rand is going to remain vulnerable as long as that aversion exists. There's concern that the rand could fall victim to extended broad-based dollar strength if this week's U.S. employment data proves to be encouraging. And that's it for today's edition of ENCA Moneyline. Remember, you can send us your comments or questions via email on moneyline@enca.com. Tweet us using the handle @ENCA News with the hashtag ENCA Moneyline. Good night.